Hello everybody. So we're with the 2-day session. It's Monday, the 12th of August, and we see that in the pre-market we already had some distribution back within the yesterday or the Friday's value. So that means prices already made it back to it, but could not get above the area of 177.25. So the open range didn't give us some entry for a short because it immediately opened and prices went down. That means we now have to wait because there is another area where we then look for the long. So as we didn't get the short, I'm looking now for the long levels. That means how does the market participants react? And there are important levels. This is first the overnight high and the cluster also, yesterday value area low, and also from the pre-market, the high volume edge at the 14. That means if we see a responsive buying at 177.14, if then we look for the long. But beware, because delta right now shows us that we are hitting this area and seeing the first big attempt to the downside. Now we see some rejection, but always be prepared. We want to see some kind of double rejection for then people not only closing their short-term shorts, but also getting with responsive behavior into some longs, and then we look for the cheap entry. So this is what we want to see at this area. And there is then also the next area is around the 06 area. Yeah, so short above 03 to 06, short above the overnight low, where we can look then for another range long if there is responsive buying. What then at the short side? At the short side for me is only interesting if we really show that what already happened in overnight late evening market, that there's really now people selling into it, because this is still accumulation areas. No, 03, 04, 05, 06, the overnight low. As I said, this is a range long market. So as the people, the bigger one, collected pieces accumulated here, this is a bull defending level. So it's smart then to wait if sellers can be big enough, rebuilding some value holding, and then even getting below the 03 area. We want to look then with increasing sell volume for the shorts with the targets 96, 176, of course 96. This is the Thursday POC VPOC, and then also the area around the 91, 92. All right, so let's look here. We're still at the 14 level. Let's look if they're testing now and if there's some responsive buying coming in again. And if not, we give them the time, the traders, to go even lower and wait for the next area, the 06 area, for responsive buying. If not, and they're still selling, let them sell first, and we will see where the stronger bulls are coming back in. A lot of success and happy trading. So guys, could you see the responsive selling that took place at this very moment? So we're seeing a double rejection. That means we touched the low twice with this move. This was then the second time that we touched the low at 9 o'clock and 6 minutes. And then you see at 9:07, responsive buying sets in again. So one could have gotten in here at the 17 level or just as cheap as possible and trading now to get to the target, the 24, the volume edge. And because we know that this is right now trading in the range, there is only two things can happen at the top. We will see either responsive sellers or we see an increase of buy volume and then pushing above. And normal buy volume means again responsive selling and range short, or after the increase pulling back, holding, and again increase. That means the chance for our long, for the hypo number, I don't remember which hypo this was. Oh, hypo number 2. All right. So this is what we're waiting now. And then we can choose between those trades. Between those two trades, sorry. Here you're seeing I'm sometimes measuring just risk reward to tell my head objectively and just reasonable and not emotional to tell where's my risk reward when I'm looking for the long. Where's then my first target? If I'm looking for the short, what's my risk reward for enter, for stop, and for target? And then what's the target 2? For this trade would be this here, because we know increase of buy volume at the yesterday value high would us give a chance to go even up to the 40 or to the 50 area. And for the short, increases selling volume. At this level where we got the long yet would mean increasing selling volume would give us the chance to even go to the 06, 07 or 03 area. So this is just for my measurements to tell my brain here, well, do you see? It is worth to take on the trade you have prepared together in context with your big picture preparation. Here we are in the 15 minutes. You see we ranging long and now again testing this pre-market area, the pre-market high volume edge at the 24, and you know this is the yesterday value we're in, so this is not impossible that if we see increasing buy volume buying hold on at the top at 25, that they may also test the yesterday value area high. And if we see ongoing responsive selling here at the top, then we have a higher chance to get in for the range short. And do remember, if you then go in for the range short and you see that they starting to move lower, 1 tick, 2 tick, 3 ticks, let's call this then the impulse phase number 1. That means the trade begin to loosen on the way downside. Remember how to handle the stop. You can handle the stop as you read then that, for example, you say impulse phase 1 started, but we can go lower to the 19. You see selling, but you see also that prices, for example, doesn't go lower than the 19. What does this mean? This would mean that in the middle of the distribution, somebody already absorbing this selling, collecting these pieces to get passive into a long position. That would mean no need to hold the stop so far away, but pull it a little bit closer, because you see there is something happening what we call absorption, and that means that the shorts cannot unfold because of this. It means tighter stop. I will delete now this risk reward drawings because I want to see the chart clearly. I already know now where we at and what I'm looking for. And now we just wait for responsive selling or increasing buy volume. And with the pullback, still no big selling, so that means absorption or increasing buy volume for entering for the long. And on the other side, of course, here the short with the responsive selling if it appears. And think of it. This is the area where it's about to be in control and know and measure and make your decision, because we are now at an interesting area. This is important to stay here concentrated, focused, and be aware of your physical sensations, emotions, and thoughts. Please write down now how you feel as you may about to be to take on a trade. Now at the moment, write it down. Don't trade maybe this time. Make this exercise. I want you to take a look at your feet, at your legs. Are you jumping? Have you some pressure on your chest, or do you bounce with your feet and with your whole body? Is your breathing very tight, or is it very comfortable and deep, or is it very short breathing and not deep into your belly? And write down how you feel. What is your emotions? What kind of emotions do you have? Do you have like feeling some refreshed? You feel like some self-trust? Or you're feeling a little bit some unconfident, knowing that in the past you made some losing trades. You haven't had you under control. Now you may be afraid of making that decision now, making the decision for either the selling or for the buying sides. Write this down. What do you feel? And also your thoughts. Is there maybe a voice in your head telling you, hey, don't take on this trade, or I know there's so many times I do lose money here. And the other side may say, okay, that's okay, I'm losing money, but I have to trade because I want to learn it, I want to make my money with it. But it's not feeling comfortable. I feel also like a little bit some pain or frustration that it may go wrong. Write this down to accept that as long as you have these thoughts and emotions and physical behaviors, be 100% sure that this will block a clear mindset trading, and the chances for making money at the long term with trading, if you're not accepting those emotions, behaviors, and thoughts, will be about zero. But if you start to accept, write down your aware and concentrate and build your awareness muscle, you will see then that there will be changes. With the acceptance comes the chance for new behavioral patterns. Only with acceptance. So the bouncing leg, the bad feeling, the painful emotions, the self-critical thoughts, they are here. And as stupid it may sound, accept them. Find peace. No, don't fight those feelings. Don't fight your brain. Brain fight means not becoming a professional, consistent, profitable trader. Acceptance means giving the chance for new behavioral patterns. As you may have written down now, or you have some time, and check the market then, and let's see what happens and how they handle the situation here at the high where we're at right now. If you ask yourself now, where was the trigger? Was there a trigger for the range short? No, for me, not for me, because we see acceptance, we see a shift of value at the top. With the acceptance, we see a shift of value to the top area. That means accumulation. To go for the short, you have only the chance to go then with a good risk reward with a failure pattern. And a failure pattern would mean that they really try to play the upside and take out the high, and then we see magically increasing sell volume, would mean that they only fishing for stops and fishing liquidity. But on the other side, the short play, as we normally take it with responsive selling, the sign may be here at the 923, here at the delta the first time took out the structure, and we see some more heavier selling. This would normally, I agree, this would normally the way where we see responsive selling, we see some double of rejection, but not this time, because we see already the selling doesn't have impact on the price. That means acceptance of price. So if you enter then with this delta structure break on the downside here at 923 and enter here at 21, why is it not good to enter here, even though the signs are now a little bit more shortish and are more now showing that the buyers could not make it? There's one main reason. The main reason you can measure is risk reward. If you enter then here at 21 area, there is only a 3 set to the edge, maybe 3 ticks reward. But on the other side, when I told you all the time in Bund we need to give him some space the trade to unfold, is at least 2 ticks above the extreme at the 27. That would mean we had 6 tick risk and only 3 ticks or 3 or 4 of reward. And this is not even a 1-1 risk reward scenario. So we don't want to take this trade after the accumulation and some bullish bias. Then we just cannot take on the normal responsive trade as it appeared here, because here we have not the signs of accumulation at the low area. This is no accumulation, but you will agree this is some kind of accumulation, because see, as they reached the high of the area and then went to the downside, means when the initial range short started here at 916, you see with a lot of selling, you see absorption already appeared at the 21. There was no coming below the 21. And then you can say, okay, now I'm a little bit skeptical, because this is not the double rejection that I can take on for the range, but it's also some sign that they cannot make it to the low, but even start buying here again after 1 minute later here at the 917, and we then stay here at the top area. Then I'm not looking for the break and say, oh, okay, now the accumulation wasn't unsuccessful, and we enter here. Here it's different. We see a lot of selling first with the starting, but we see they take out the shorts, okay, with this candle here. Boom, 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 boom. Buyer's rejection. And then I want to see double rejection, means going back to this area and more buyer. This happens here. So here was a reasonable entry, and this is responsive selling, buying. But this here is, once we reach the top, some little short, another short, but immediately rejection. That means before I even could enter, because there wasn't the double rejection, but a single rejection with big selling that got absorbed. This is wonderful for me, because this tells me then, wow, cool. Even before I could make a lucrative minus trade, I got the signs that they reject immediately at the 21 level at this edge. And we're now seeing a bullish imbalance. That means this is everything absorption behavior at the top. And when they get out of shorts, get out of longs, and here get out of longs, and again here get out of longs, and then again here get out of longs, and even maybe some people shorting, one can see in the delta candlesticks, as also in the chart technical way at this structure, that they still staying in control. Bulls staying in control. That means if buy volume now increases as running through the top of 25, pulling back without heavy short volume, pulling back without heavy short volume, or pulling back with more short volume, but absorbing by buyers and increase of volume, again we enter quick with the target 34 and 40. On the other side, increasing volume, pushing to the high, immediately rejection. We looking for the next pullback and entering with the short. Everything happens in between those scenarios I described is staying flat and watching, because we always remember it is necessary to watch price action order for the tail. Only watch where the activity levels are. In between, we don't want to see this because this is only noise. You see bulls still trying to stay in control. This is why if there is a structure, it's not making so much sense to go in at this level here. Even if you see that the delta structure is about to break again, you see more selling volume, remember, we rate this area because of the profile, it's a bullish imbalance. Because of the absorption we already seen with the first range short, here and then here. Lately, if you see this behavior, then we rate this scenario. This scenario is not then the normal range short scenario. We want to see the rejection, maybe some taken out fishing liquidity. And if we see this, then we look in here for a cheap entry, but not here, as already the target is the 17. The risk reward is not good. And don't overvalue them and overestimate the chances the next time when you may observe now that the trade would have worked out if you took it here because they reached the 17. Don't do this. Stay with the system, stay with the play. That's more important. I now wanna make you. I now want you to make another observation of the overall market behavior today, and look at our numbers field today in my briefing, where you can see there's only one entry at 10 o'clock in Australia, which is also some minor economic event. And then look at the market behavior. There was the one trade opportunity this morning with the range long here at the 17 about 9.7, which you could trade. It was the hypo number one trade with the range long levels I told you at the 12 to 14 and 06. We tested the 12 to 14 area exactly and see responsive buying rejection 1 and number 2 an entry area. Then I told you not look for the short. They want to fool you. If you get in here, look how long you would have to be in this trade now. Look how many times you may be in a -3, -4 position and didn't reach the very, very tight target area. Look at how many times absorption took place here. Look at everything. And now look how tight it stays. And look to the view economic numbers, which are obviously not even exist. And see that then we can see today that there's a very tight range. It's maybe an overall. We are maybe already in an overall small distribution. Maybe also the chance that we're not, and seeing then increase in the trend play if there is something coming from the outside news, economic or politics or some other thing happen. But now we make some difference. Normally we are praised with the 4 out of 5 days or 3 or 4 out of 5 days where we have then this normal volatility, and we also have some clean picture in the big picture. This is the best combination for your place development, for my place. Today we had number 1 was given. That was we are in a clear situation. We have a clear profile from the day before, from the Friday. We see that we play the edge in the range. We are in a wonderful, clear situation. This is not a blurred picture. Sometimes, when I tell you, remember, we're in a no man's land. Matthias also said this is then the no man's land. The participants don't know what to do, but today not. And then there also must be in the micro picture. If there are no numbers and nothing is going on, then we may get into a low volatility environment. And obviously this is something that changes today. That means that need to have an impact on your trading also. For me, almost like my stomach tells me today now, after I see this behavior from today, and I see how very slow orders coming in, that we have now very low volatility. Yet it can change, but only what I see yet so far. That means I will be now even more sharply looking at my levels, if it even worth to take on a trade. Because in a low volatility, with a market with less numbers than usual and no events taking place, it's better not to trade your normal volatility plays, because they will not work out in this kind of markets. And if you measure this, you will then know also in your market that this will not work out. That's very important. So now we at least having the best risk reward situation for today so far. Means if we see now the increase of buy volume, I'm not jumping in at the top like top tick Tommy and trade along and got stopped out then, but I want to see if we're really taken out with a lot of buy volume the high. And if there really is some guy with an order or a bigger order, we want to see then pull back and increase, or even combined with absorption. And only then I enter, because if not, then it's only liquidity fishing for the short, and there is no real big guy who want to lift us up to the yesterday value area high. And only this would give us a good risk reward. So then we take in care and say, no. I'm not gonna take on this long. Then we look in more here for the short, because then we had some clear signal and we had this failure pattern, a failed breakout above the initial balance range high, which means again testing the high and seeing harsh rejection like this candle here, but this took place within the structure as it was not broken. It would be better now seeing this as the structure is about here to break and even got one tick higher and extended the high of the initial balance. Give us an advantage then. But we need to see really rejection. If it's just going up and some little selling, I don't want to see some little selling here. This would be not the rejection sign I want to see for the short. Because think of it, risk reward is minimum, acceptable, but minimum, that means a little bit better than 1-to-1. So this is worth a trade, but only if we see the clear rejection signs. If not, then there is just no trade. We go with our play. Okay, we measure now. You see this? We are now situation number 1, increasing buying volume at the top. We don't jump for the entry long here. We want to see confirmation. We are smart. We want to see confirmation first from other side. Let the other take the risk when they're pulling back and seeing that they still want to buy here. As they pull back, we want to see they absorbing either the more short we see then in delta and see short, but see absorb. Or we want to see no big selling, but immediately when we going back to this area of control, look at the area of control. Where is it? Area of control of the buyers. The last is exactly at the 23 to 24 level right now. Means when we pulling back here, we want to see increasing volume buy side again, and then we enter. Only then. And there's, I think the probability is not so small that this is just a failed breakout, or could be also a failed breakout. But remember, we want to see the rejection signs. But remember, there's a very low volatility market today, so don't be too overexcited now. We just wait and let the market tell us what's happening. So I will comment this. We are now in the next phase of this beginning breakout scenario. First, what we see is, well, the buying volume up here is something took place. It's not heavy right now, but we also see that the selling that occurs here at the 27, the most pieces sold into 209, about 215 overall, and another 70 got sold into the 227 level. You see still some selling, so right now it's looking okay, but remember, with this pullback scenario, there is still room for the pullback to the 23-24 area. So if you want to see the trigger for the buying, you either go with the now immediately increase of the buy volume and enter around here, or you wait for the pullback to this area and see that the sellers got absorbed, and as soon as buyers coming in again with some increase and delta structure would mean that the buy candle should have been the shape of a strong candle from the downside, maybe some stick on the other side, and then a body from here to here. Then we will enter on the way up before we reach the 29, but maybe at the 27, 8 area, but only if we see absorption at the bull's control level where we're at right now, here at the 25, 24, 23, or if we see absorption ongoing, okay, or if we see, as I said before, the body, the green delta that gives us the entry here. And then we have target 1, 34, and target number 2, the edge of the volume about the 40 level. So please look at the market and look at the behavior of the market participants. How do they react? How do price react on the selling? Is absorption? How can we spot some new buyers coming in now as this area? Or do we see none of the signs? Then we wait for the responsive selling that failed, or let's call it more the take out the longs and the failed structure of a breakout then. And this is not easy, and it's a lot of information you have to look at the same time. So for this case, you see then how important it is to have a clear mindset and be not blurred and be not in control, but making emotional based decisions. And this you will definitely. You cannot control this if you're not aware of your emotions, sensations, and thoughts. Okay, increasing buy volume. At this moment, as I said, we see some absorption, and now at the top area, the increase of buy volume again. So as I said, we say increasing buy volume with a delta structure at the top area. If you're now in the long at the 28 level, this would be totally reasonable. I didn't take it because I wanted to see that the buying control with the absorption collects some more buyers than this little here. But it's still okay because you see the buyers defending area with this buying support starting 947 starts here around the 25-26 area. So it would be totally okay, a very good, technically a lucrative trade if taken in then as your spot here, this buy increase again and got in here at the 28. That means your stop would be then at the 24. And this would absolutely reasonable, 2 ticks below this volume edge, maybe a 23-24 area, and seeing the holding structure, seeing absorption, and then increase of buy volume. I tell you, this is absolutely a reasonable trade. The reason why I didn't take on this trade was, first, the rejection side, the absorption signs were not as super big as I want to see them in this very low vol market, because I want to see now the volatility is changing. That means a big guy. This would increase now a little bit the speed of trades coming in, and you want to see then there's really impact of the sellers got rejected, and I want to see also that the buying volume increases like here, and this didn't happen. That doesn't mean that I'm right with my interpretation, because this is just the way I avoid taking too much risk on. I'm avoiding taking too much risk on trades at a very low volatility day so far, because this is just smart. But technically, everything I told you so far, how to interpret the market, how to read the delta, how to read the behavior, would be absolutely reasonable then to take on the trade here, because you see this holding structure, you see this buy protection, you see the bull defending level, which was initiated at the 26 area. So having your stop now at the 23-24 level would be absolutely okay, and this would then tell you if they got stopped out. You can just get stopped out here, because then it would tell you, okay, they cannot defend, the bulls cannot defend this at the moment wedge consolidation, and that means volume would measure then, if they stay alive, it would measure then the success, remember, or the failure of the possible scenario of the relong here. We will see now if another try of the bulls take place, and if they now can take out the high and reaching then the target area at the 34. It takes some time. And remember what I said here, around here before, I'm not in a short trade. So, of course, you know why? Because I told you, if we see the signs of buying, either I want them strong. I want them strong with the buying, absorption signs, which I said in a normal volatility market, this would be very cool. I would take on this trade, but not in this low volatility market. And on the other side, for the rejection, for the failed breakout scenario, I want to see also the strong signs of rejection as well. That means for me, it's now either being in a long here or staying flat, because this signs here of not taking out the long of the high here is not meaning that we're already in a short scenario. This is not a failed breakout yet. Failed breakout would be, the best scenario would be again taking out the high and boom, really harsh rejection, a wonderful stick on the top of this body of the candle, and big selling, increasing selling, responsive selling then at the top, stick, stop, and then you can go in with some short pullback around this 24-25 area and have then the targets at the 21 is the volume edge to 22 to 19. But this also hasn't appeared. So you're still very slow market, still in the bullish control, still in the bullish scenario. So don't let you fool by the market because it's so slow today. You see, you're still in the long trade. Still nothing has happened. We're still staying in the bull's control level. We touched to 24, but only sold 6, 15 and 2. That means you even not got stopped out with a stop at 24 because they only sold into the bid 23 contracts. So this wasn't probably not enough to fill this order on the low. And you see still absorption, still then increasing buy volume, still some little tiny in a row buy orders now, 74, 22, 12, 88, 25, 13, 13, 11, 23 and 16, lifting from 25 to 27 again. So we staying, you stay if you took on this trade around here, seeing the signs of absorption, then holding and new volume, and haven't entered here at the 28, please remember you stay in this trade. But also be aware, if they take out the high now, we don't want to see the hard rejection. And if there's no the hard rejection, then we stay in this trade and wait till we reach target number 1. This is the volume edge and the yesterday value area high at the 177.34. So if you handled it the way I told you, you now got paid. So that doesn't mean that I'm a super smart guy, but I just want to tell you, I having some skills, of course, in the theory, but the most important thing is, you can make those skills also, you can build them in a few months, but the more important skills, this is what a little bit more work is to do and a little bit harder, this is to build the mindset. And remember, if you entered this trade here, again, as I told you, at the 28 area, and you reach now target number 1, and you know target number 2 is the area of the volume edge around the 39 and 40 area, then you have to be aware that your emotions don't fool you and tell you, oh, they sell now here at this moment, or oh, they even sell now a lower low, oh. And you would maybe lost this trade because you would have pulled the stop too close and then was stopped out. Definitely, you will agree that this had happened to you in the past, maybe, but because you didn't see where is the real buying level, so you didn't see where are the buyers still in control. And I told you we're looking at the delta structure, and we see absorption area number 1 was here. And absorption area number 2 at initiative buying comes in again was exactly this level, exactly here. So now you see, now you see 26, and I said at least we given 2 ticks below for the stop. That means our stop would be at the 24. I said you can put it to 24, I say at least. That means 24, 23. But even if you had your stop at the 24, you would not get stopped out here at 9 o'clock 59 and at 10 o'clock and 10 o'clock in 1 minute where we touched the 24, because there was 2 less contracts, only a few contracts sold into this area. That means normally if you not was the first guy who was standing in a row in this position, then you're normally rightly, but you would have not got stopped out here, because this buyer controls area was just expanded a little bit tightly to the downside, and they still stood in control. You're seeing here at this moment that immediately when they take out, okay, this 1 tick lower, they stay in control. Buying, 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 buying. Reaching target 1. Pull back. Buying, buying. Haven't not reached target 2 yet. But you know what? Your stop can be now at the entry level at 28. That means with the second position you have still in your books, you will not lose any money. You made money with your first contract, and your second contract will stay at least with the target at 40, not before. You not, please don't pull the stop. You not take out this position before it either got stopped out at the entry level, and then that's totally okay, you give it some space, or you wait, and if you not got stopped out, you wait till it reaches the 40 area, and then you have a wonderful trade, isn't it? Then you made a 6 ticks with the first position and another 12 ticks around with the second. And then you can call it either a day, or if you even then had a third position, you can go for the home run trade. For the home run, you can just leave it, stop to entry or a little bit higher, and then you can pull the stop together with me. That's what we're now gonna do. Playing it. Now we wait if they take out the high, so we can get our first target, our second target. And if we really see a trendish day, I'm not so sure we will see, but let's assume we will see then a trend. I will help you with position management, where to put the stop then, and it's gonna be fun to watch. Remember, time, price, opportunity, market profile. Time regulates. Time regulates now that we're holding in the structure. Time regulates this this price move to the upside. Now look at volume. I will tell you volume measures now at this moment here when we're at the low. You see that the volume showed us there are still buyers measuring success or failure. Right now we see a more advantage of success, that this will even take out the 40, because look in what happens when we're reaching the low of the structure where the buyers are in control. They re-increase and get in even market. All right, see this here, how wonderful volume also builds at this area acceptance. That means you at least having an edge, the advantage that they want to stay in control, and you have a high probability with the pullback at 10.6 and also seeing at 10.8 to be right staying in this trade. I think this is obvious. You can use this trade you're in maybe with a good position. Now ask yourself again, check your awareness for your physical sensations. You're sitting still in your chair. You're breathing small and deep. You're breathing calm and very deep inside. What are your emotions? You feel comfortable right now? You're feeling a little bit uncertain? What are your thoughts? Is your thoughts telling you, I'm not sure, should I enter? Should I end this trade? Will I give it some space? Will I pull this stop now? Is this long move over? Will I secure this? Or will I stay? Can I trust in myself? Is there some self-judgment? Is there some uncertain thoughts that tell you, I don't like it? Write it down and train your awareness muscle. Thinking of you're a football player and you're not training catching the ball sometimes. You're the kicker. Think of you're not training to hit the goal. Or thinking of a pilot who have never trained how to handle the airplane when it gets into a stormy condition. When it's about have to land the airplane and it's a little bit more windy than normal. It's even stormy. And some sharp winds coming from time to time because there's maybe some thunderstorms. And thinking of this is like when trading comes to this situation. When you're entering, there is the thunderstorm of your airplane. When you're in the position and they don't stay textbook within this range. They don't stay within the 36. What the hell? They're going down. That's it. Maybe that's it now. I have to close second position. That's it. You know what I mean? This is the emotional things taking over now. And they control your trading. You have to accept this. You may have made these observations in the past. And you're wondering then, why can I not be consistent profitable? Why can I not be? Because you let your emotions, at least at one phase of the trade, either it's in the execution phase or in the management phase, you let the trade taken over control, your emotions taken over control. And that means that you're not staying with the statistic. And it's again and again, I don't know how many times I said this. It's first just to find acceptance that there are some emotional driven decision-making processes of your survival brain that will make you fail in not going with your system. And this is absolutely the problem then. And that's also the solution. It's the core solution is not let yourself drive by your emotions. And see now how this pan out. I said with a second position, we not pull the stop to close under the microstructure because the bulls are still in control as long as they stay within the overall distribution edges. And you see that there is a low volume node also at the 31. And I draw this profile before this move to the downside was made. Okay, this is not a cheat. We didn't know how the profile looks like. But at this very moment, we see there was some low volume node. That means even so they built value over here. And we see some lower volume area here at the 35 where we could tell, well, then we put our stop below this low volume. This is not the true because in a trendish environment, when a trend started, they may pull back a little bit lower. They even may pull back to where everything started to the area of 27, 28. This is the volume edge. And see if there's the absorption. This is why I said to you, if you enter at the 28, you can now very wonderfully move your stop to your entry level. And in the worst case, you got stopped out at entry. That means that you don't lose money and it's house money and you can stay in the trade. But if you're getting controlled by your emotions now and seeing, I want this structure to hold because then I can even take out some profits. If the market stops me out at 34, then I even get some good ticks at 34 from the 28. Okay, then again I just took 6 points again, 6 ticks. But you cut you're probable winner than too fast because your emotions control yourself. Here was the moment of execution, thunderstorm landing an airplane. Here was at the management phase your thunderstorm that gives the untrained pilot a high probability of crashing the airplane down into the ground. But the good trader, the consistent profitable, and call him the master trader who trades from a mere clear mindset. He's in a situation that he's not getting over emotional when something like this here happens. That's the crazy thing. And if you ask why, then maybe 1 out of 1,000,000 is so super talented that he is not having this emotional fight, and that's okay. I will not say that there is not this super nature of talent who can do it without any training, but for most of all traders, for 99%, it will be that they suffered the same pain as maybe you do and others do. But the reason is, once you start to accept that there's maybe a lot of more emotional control in your trading than you think that you control, then you start to begin to become constant profitable, or at the beginning at least, of a long trail that leads to a consistent profitable trading. And I tell you again, what are the tools then to achieve this goal? What are the fucking tools? Sorry, but the tools are, if you're in this thunderstorm at this moment of your trading management phase, or if you're at the thunderstorm at the execution phase, write down and be honest to yourself. Don't cheat on you and tell you that you are not having some maybe physical sensations, emotional or thoughts. And the other who listen to me now and are already professional traders who are consistent, profitable, I'm sure they will agree and say, yes, in my case, I haven't had a huge thunderstorm of emotions, maybe a little bit, but they are more like in a state of mind of where they find some acceptance, that these feelings appear because of your survival brain and your neural meta connections that just protects you of a losing trade that will make you suffer a lot of pain. This is the same thing when your survival brain protects you from the tiger in the savannah, in the jungle, who want to eat you. And if you start to find, so the tool is first, write down your emotions to get aware of it. And the long way then, weeks and months, is to get more and more, find more and more acceptance. And tell yourself not to fight it, but say, that's okay. That's okay here. Wow. It may go looking down, it maybe got stopped out, it's feeling a little bit not in control anymore of this trade, and that's right. And you say, okay, but I accept this. And if you would do it like I told you to train to do, then you would be feeling quite good. And you see, okay, they just tested, we find absorption, buyers staying in control, and boom, 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 coming in, coming in, coming in. See this here, coming in again. I think this is very interesting. And I can tell you not just from my side how many times I crashed my trade, and here take the profit because I see, oh God, I'm going down, it's going down. It's better now to secure it. But the other guy, he was able now to see what happens at the top again. And he could make then a decision. Can they take out the top? If they cannot take out the top, how is it looking like? Is there a rejection signs now? Is it a really big delta divergence, which tells me now, okay, even the third try doesn't make it. Okay, you know what? In this time now I will pull my stop maybe here below the low at 31. Then at least I get a few ticks out of it, because now they fail 2 and 3 times. And they can make a decision, but they give the time for the trade to unfold. And they have done often, and maybe 1 or 2 or 3 or 4 out of 10 times. Can you imagine, just technically, theoretically, can you just imagine that at least 3 or 4 out of 10 times this scenario builds follow-up buyers and gives you a 20, 30, 40 tick trend trade and a lot of fucking good profit? Can you imagine this? Or would you say, no, 100%, this will never happen. Market will never trend up. No, never. The market, Anton, market doesn't trend up. If you can tell me, okay, if you find a market, this is 100% of the year and the last 20 years is always balanced and not trending up, I will totally agree that it's totally bullshit what I tell you. But in the case, if it's not the case, what I'm quite sure that because I haven't found a market yet that's not trending sometimes, then it's more successful if you go with the statistical part of trading And of course, you always have to go with the statistical part and say, okay, I let this time to breathe, I give them the space here, and I say, as long as they're building value, now we're shifting even the POC, and we don't know, it can crash because of failure and a lack of OTF trader will keep us going back to the balanced area here. Everything okay, but think of it again. What is the best probable situation a trader can have with more positions? Right. Having paid house money, having a cheap entry here at the 828, being in the position and wait just the trade to get played out. And think of it. Now we have the first position here secured with our target 1. Target 2 was not touched yet, was not reached yet. That means we're still waiting for it getting filled and staying with our position number 2. I think that's so beautiful to become more and more this feeling that you're in control of your trading when you start working also on your mindset. Now you have something fine going on because you was not emotional driven. You stayed in the trade, I hope so, with your second or third position. At least with your second position, you wait till we reach the 40. And now you have some wonderful thing because look what happened. Here, starting from 34, people get into more, into again in the longs again. That means we have now a new buying control area, some reasonable buying control area where one now can tell. We see big absorption. We see re-entering and control, trying to find control already here. But now, ongoing buying. Some absorption, that means at this moment we could not lift the 35 because they paid the offer, but could not lift it, and now they lift it. And even more buyers coming in. Now again, that means we're now having an edge. And now we can say, okay, now it's maybe okay to pull your stop from the 28 to 2 tick below the at the moment LVN. That means to the 29.30 area. That means even in the worst case, you're now having a 1 or 2 tick profit with your second contract. That should please make you even more relaxed to just stay in the trade. You can now leave the desk, get some coffee, and just wait. You either get stopped out with some tiny profit, or you get this wonderful second target, this volume edge at the 40 level. And then you have a wonderful traded second position with your with my hypo number 2 with this long. And of course, the target number 2, the T2 or the T3, what I call it then, target 2, target 3. Target 3 would be then even the home run trend. But even the target 2 takes some time. This is almost more like an intraday swing. Yeah? The target 1 is something that happens normally within minutes to, let's say, 2-3 minutes to up to 20 minutes. So normally. Target 2 is normal that this can even take half an hour to an hour or 1.5. So you cannot expect to get T2, target 2 profits with a scalping technique of only want to sit in a trade for 10 or 15 minutes. This happens very seldom. This just will be a not so smart goal to trade this way. A T2 target, the target number 2, which I give you in my pre-market preparations. You have to know this is for the type of trading where you then have to wait maybe an hour and a half hour or an hour and 1.5. That's the way. If you're absolutely not feeling comfortable with this, you may better not then go for this kind of trading yet. You can develop your skills first and then can say, okay, I go with that. And always remember, it's not a shame. It's not a shame. So please don't blame yourself on not be able now already to take on trades with the target 2. But I only tell you now just to build your skills, to see how technically what we see, what it looks like, and that's more important. Do you see this behavior on top now? As they sell again from this top area, as they sell into some bid absorption. You see absorption and refilling the bid. When you watch the DOM, you can see at the 37, 38 contracts now refilled 100, 150, 148, 153. Re-entering the 37 area, 60 contracts, 120, 280, 200, 200. So right now they're trying to hit and take out the high. You see this with this behavior, the small leg sticks on the bodies on the downside, increasing volume again after they hit here and here and here. That means they absorbing the 36 and 37 and 39 area. As long as they absorb an increasing volume, you see that they are really trying to get passive and active into the long here. So that means all the time, as I told you, it is always possible that bulls staying in control as long as they seeing the test of the control level, seeing the real more significant volume edge, and it can take some time. But you see, as long as they absorb like they did here, like they did here, like they did here, like then they did here, and like then they did here after around some spoofing and POC trading, but again here, and now starting to change even behavior, to be more aggressive, passive and active buying, and increase of volume at the top. Remember Jim Dalton, price purchase for all directions. He purchases for lower and for down. It advertises. Then time regulates this behavior. And then volume measures failure of success. And where does it measure the failure of success? Of course, at the extremes of this situation here. And now you just 30 seconds ago you just got hit at the 40 level. It got there more than 140 contracts, 200 got sold, 140 even sold into this level. That means now you hit your target. Congratulations. You stay within the trade maybe. Then congratulations. If you got nervous and end your trade at this situation because you didn't give the stop enough space, then congratulations as well. If you at least write down your emotions, physical sensation and thoughts, congratulations then. It's okay to lose this trade because of emotional pain or control of emotional took over control. But congratulations if you at least make your homework and write down your emotions to train your awareness muscle, your brain, your awareness. That's okay. No congratulations, but still way to go and to increase and develop. If you stopped out here or got nervous and took out here or here, and even you got a very good cheap entry here, and then no congratulations. If you then not even if you got stopped out and not even write down your emotions, physical sensations and thoughts. And again, and prove yourself, and you will find out this will give you so much more pleasure than in your development as a trader. I would say this was again a very interesting trading session, and as I said, with the hypo number 2 reaching target 1 and now even the target number 2, we had some nice day today. We had some wonderful environment from the big picture, a clear big picture. We had done a little bit a lack of interest in trading around this area here. That means that the people were not so much involved today, no economic numbers, so mean low volatility day. But at the end, the other time frame traders helped us to stay alive. We saw hypo number 1 played with a wonderful double rejection. We saw hypo number 2 played with the pullback, holding here, and then increase of volume. When I said one could enter here at the 28, we reached then around 10 minutes later our target number 1. We remember hypo 2 said if we see still ongoing increase of buy volume at the yesterday value high, what happened then here obviously, and then with the pullback, and when I said we don't pull our stop to close, but from everything started, bull defending area was more around this area, so we stay with our stop here at the 28 below 22 ticks. We see then there is some trying pushing lower, 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 but we also get the wonderful signs that the buyers want to stay in control. At this moment we see then, wow, okay, getting back, absorption, and then boom, boom, boom. And then we know from this moment on, now it's time to stay alive, get even into this trade for the small risk reward trade to the 40, or we stay, as I said in my hypos, with our position number 2 in the trade, and we can put our stop 2 ticks below the at the moment low 31. That would be mean 29. If you entered at around the 28, 27 area, that means you didn't get stopped out here with the 4 tick stop, and you didn't get stopped out here anymore because they stayed in the bulls control level. We see the shift of value, we see the bullish imbalance, and we see don't get nervous if it takes some time, because we know target number 2, T2, takes some time till it got reached. Today it took about 1 hour till it got reached. This is totally normal and common. And I want to say, wish you the best for your development now for trading. Thanks for watching. The recap then later in the afternoon time. Thanks for watching. Anton Höpfel for Manapa Trading.